Good morning, students. Welcome to this session on audit. So today we plan to start with a new topic that is about audit of insurance companies. Yeah. Talking about audit of insurance companies, it's a very peculiar thing, and this is because of the fact that the insurance company in itself carries a completely different business, and this industry is highly regulated, and this is again because of the fact that public interest is involved in an insurance company or various companies which are within the insurance sector. So that's why whenever it comes to the audit of an insurance company, we need to not only understand the requirements of the business or requirements of that company as an auditor, but we are also required to understand is about the various regulatory requirements, because we need to ensure as an auditor that all of these legal compliances which the company was supposed to follow, whether those have been taken care of or not. Okay, so first of all, we will begin with some of the basic aspects related to the insurance company. We'll try to understand about the nature of the business and some of the requirements which will be applicable to them in terms of the legal provisions, in terms of the business related requirements, and then we'll move on to the auditing aspects related to all of those requirements. So now, when it comes to an insurance company, let's try to understand the business which may be involved in an insurance company. For an insurance company, we can say the businesses can be divided into two categories. One is about the life insurance business, and second is about the general insurance. So, the business for an insurance company, we can say, can be categorized into two parts. And that is how we need to also understand. And that is how we also need to understand about the audit requirements. Life insurance and general insurance. Now, in relation to life insurance, let's try to first of all understand what is this life insurance and what are some of the requirements in relation to this business aspect of any insurance company. Now, it is not necessary that every insurance company will deal with life insurance as well as general insurance. It is possible that a company is dealing only into life insurance or only into general insurance, and at the same time, we may also have companies which are dealing into both, but it's not necessary. Now, what is life insurance? Something we all understand, which is very, very commonly known to us, wherein the risk cover is provided by the insurance company in respect of the life of the insured. Say, for example, there is a person X. Now, this person X wants to take an insurance cover in respect of his life. Means, after the death of this person, a specified amount, will be paid to the legal heirs of this person. So that is about life insurance, wherein an insurance will be provided not to the person who is insured, or you can say the claim amount, or this amount, the beneficiary of this insurance will not be the person who is getting insured, but it will be some other party. So you can say, let's suppose family members of X So family members of X, they will get the benefit of this insurance. All right. And who is the insurance company? Insurance company can be any. So X is the one who got insured. And in case of any mishappening to X, who will get the benefit? Who will get the amount from the insurance company? It's the family members. Yeah. So this is broadly about the life insurance business that we understand. Let's try to understand about general insurance. In relation to general insurance, we are not talking about the life of an individual. Say, for example, if that is related to anything other than life. Say, for example, that is about car insurance. Car insurance. Now, in relation to a car insurance, the person is not getting insured, but that specific item means other than human being is getting insured. Car is getting insured. In respect of this type of insurance, what do? We pay a premium amount on a regular basis, because of which this item means the car gets insured, and if there is any loss to the car during the period when the insurance is available to the car, any loss will be taken up by the insurance company. Yes, so now we can say there are three parties which are included. One, car owner. Second, of course, the insurance company. And third, the item which is getting insured, that is car. Okay. Now in this case, let's suppose if there is any loss to the property or loss to the car, then who will get the claim amount? In this case, claim amount will be made available to the car owner. Yeah. Now let's try to understand some of the differences in between life insurance and general insurance. What we generally see is that when it comes to the general insurance, insurance is required to be you can say this insurance policy is required to be taken every year. So every year, or you can say on an annual basis, this policy gets renewed. So for example, for car insurance, every year you pay the premium. Premium may be paid at one time or on a monthly basis, whatever it is, but every year you will pay the premium. And after the period of the insurance is gone, then the policy is also correct. But when it comes to the life insurance, it is not the case. Means when it comes to the life insurance, the person will not benefit. So this was about person X. Person will not benefit if he is paying the premium, means the insurance premium, only for 1 year. He would definitely require to pay the premium for a long period of time, and which is up to his death, or maybe a specified period which is there in the policy documents, or you can say as per the terms between the insurance company and the person who is getting insured. But it's not something which will be required to be done only for 1 year, unlike what you see in case of general insurance. Okay. Number one. Number two, when it comes to the general insurance, After 1 year, whatever premium would have been paid, that is over, means that is gone. So when it comes to the general insurance, let's suppose for 2 years, the person has paid a premium of say 10,000 and 12,000. Okay. So over 2 years, rupees 22,000 have been paid. 10,000 in the first year, 12,000 in the second year. Now, will this money come back to the person who is taking this insurance? No. It's a kind of expenditure which is spent and is gone. It's gone off. But in case of a life insurance, it's not the case that the money which we have spent in respect of the insurance is gone. Why? Because if the policy is continuing, then up to the time or up to the period over which insurance is required to be paid, the person who is getting insured will pay the insurance premium. But after that period, certain portion of the insurance amount which he would have paid may also be treated as an investment, which will come back to him. And that is again dependent on the terms between the person who is insured and the insurance company. So again, over here, this is one of the features which may be available in case of life insurance policy. So you can say this policy also acts as investment policy at times, but which is not the case under general insurance. Correct? Next, as we discussed, in case of life insurance and general insurance, the perspectives are different in terms of the persons who are insured. Yeah? But having said that, the overall objective under both the types of insurances remains same. And what is the objective? Risk cover in respect of the loss. So there are few terms which we now need to understand. First, we discussed about premium. Second, we use the term claim. Yeah. Third is about this term of the insurance policy. Right? Some of these terms are very basic terms which are helpful in terms of understanding about the business of the insurance company. Now, what is this premium amount, or what is called as premium in case of an insurance business? The risk cover which the insurance company will provide to the person who is getting insured, or in respect of the item which is getting insured. Yeah, for that risk cover, insurance company would want to earn some. Yes or no? Because that is how they will also earn, because insurance company is there to make profits. They are not here for any charitable purpose. Yes or no? Yeah, this is not something which is in the nature of not-for-profit organization. They are commercial organizations which are there to make money. So that's why they also need to earn revenues. So what will be considered as the income, or what is that revenue which the insurance company will earn? That is nothing but the premium amount, which will be paid by the customer to the insurance company. Okay. Now, when it comes to the financial statements of the insurance company, we will also come over to the financial statements in a certain time. We'll understand that all the revenues of the insurance company are what? They are nothing but these premium amounts which are paid by various customers. Number two is the term which we again use, that is claim. Claim. Now, in terms of the claim amount, this is not an amount which will be paid by the customer to the insurance company. No. What is this claim amount? Claim amount means an amount which may be required to be paid by the insurance company to the insurer. So let's suppose if there is any loss to the car, then the person who has taken the insurance will go to the insurance company, will ask for that loss amount, because that is why he has been paying the premium. So now in such a scenario, the amount which the insurance company may be required to pay, why we are saying maybe, because it's not something which is certain. It depends. For certain customers, insurance company may be required to pay, and for many customers, insurance company would not be required to pay, because each and every person will not come with the claim amount. Yeah. So this amount which the insurance company will have to pay in respect of the loss of the property or loss to, or let's suppose mishappening to any to any person in respect of life insurance business, is considered as the claim amount. So this is claim amount. So claim amount is something which goes from insurance company to the customer. Now, when it comes to the financial statements of the insurance company, there is again one of the most important component in terms of the expenses of the insurance company will be what? That will be nothing but the claim amount, because this will become an expenditure for them if they are required to pay the claim to the customers. So what will it become? It will become expenditure. Correct? Yeah. Third is about the term. By term, we mean to say the period. Period for which the insurance policy would have been taken. Generally, as we discussed, for general insurance, term is 1 year. Generally, you will see this to be 1 year. But for this life insurance, this term you will generally find not as 1 year, because this will not be beneficial to any person if he is just going for insurance cover of 1 year in case of life insurance business. This will generally be a longer period of time. Yeah? Clear on this? Clear on this? So this was briefly about the nature of the insurance business, which I am sure many of you would have been knowing, but it was good to understand about it. Now, as we discussed about the insurance company, that the public interest is involved here. And wherever the public interest is significantly involved, such type of business becomes subject to regulations. That is very, very important to protect the interest of the public. Some of the regulatory requirements are something which you see in addition to, as, or you can say as compared to any other sector. Now, same is the case for an insurance company. Insurance sector is also highly regulated. And in respect of the insurance companies, a body, you can say Insurance Regulatory Development Authority of India, is considered as the regulatory body. And some of the regulations to which this insurance company will become subject to will be from the IDA perspective. Having said that, some of the basic legal requirements like Companies Act, Income Tax Act, yeah, all of these requirements will continue to remain applicable to an insurance company. Why? Because insurance company is a company first of all. So that's why Companies Act will become applicable to this, because the company is making money, company will be required to pay taxes. So that's why Income Tax Act will also become applicable to the company. Yeah, GST will also become applicable to this company. So all of those legal requirements continue to remain. But over and above this, in relation to the business which the company would be running, some of the business regulatory requirements are from the side of IRDA. So all of these IRDA regulations are the one which we need to now focus on, because those will be specific to this type of company and those are stringent in terms. Yeah. So now, in respect of insurance companies, we can say, first of all, there are certain requirements in relation to their registration, in relation to keeping their minimum paid up capital, which are specified. Plus, there are also certain regulatory requirements in respect of these insurance companies, wherein they are also required to maintain their solvency ratio. So this is also similar to what you will see in case of a banking company or an NBFC company, wherein you find that all of these companies are, or entities are required to maintain certain solvency ratio. And why is this so? This is because of the fact that tomorrow this company may be required to pay certain amounts to the public. And let's suppose if the company will not have adequate funds, adequate reserves, then the company may not be able to pay all of these amounts. So that's why at least a certain proportion of their funds should be kept with them. Those should not be spent, or those should not be invested anywhere except those which are specified. Yeah. So all of those sort of regulations are the ones which the insurance companies are subject to. So let's quickly have a look at some of the basic requirements in relation to an insurance company. So minimum paid up capital. Now in respect of the minimum paid up capital, company needs to have minimum specified capital. As we discussed, that insurance companies are also required to maintain a minimum solvency ratio. If this minimum solvency ratio is not maintained, then that will also be considered to be a kind of non-compliance. Now, as we discussed about the ADA, so ADA Act is something which is applicable to the insurance companies, and this has got various provisions. So we will not get into the technicality of each and every type of provision. That is not something which is very, very relevant to us. Now moving further on to the very specific aspect which we now need to focus on is about the form and content of the financial statements of an insurance company. Now, unlike what you see in case of any other company, yeah, you would have gone through the financial statements of a lot of companies. You would have also understood audit requirements in relation to a lot of companies which are not into the insurance business. There are certain peculiar requirements in respect of preparation and the content of the financial statements of an insurance company, which you do not find elsewhere. So over and above balance sheet, profit and loss, an insurance company is also required to prepare a statement of revenue. Insurance company is also required to prepare receipt and payment account. Yeah. So this is something you can say which is a component of the financial statements of an insurance company. And the formats in respect of preparation of the financial statements of an insurance company are also specified. These are also governed by the regulations. And when it comes to the regulations, I told you all of these regulations are the ones which are coming from ADA. Now, as you can see, depending on the type of business which the company has been carrying on, its formats may vary. So Schedule A is applicable. Now, when it comes to the Schedule A, we'll talk about Schedule A. Schedule A, you can say, is part of the regulations. The regulations, you can say, are divided into various schedules. So, Schedule A is the one, or you can say this part of the regulations deal with the life insurance companies. Then, second part of the regulations, that is about Schedule B, deals with the general insurance companies. Means some of the provisions in relation to life insurance business are required to be looked at specifically in Schedule A, which also means that those provisions related to life insurance business will not apply to general insurance business. Similarly, when it comes to Schedule B, or you can say some provisions or some regulations which are applicable to general insurance business will not apply to life insurance business. Yeah, so that means these regulations are specific to life insurance companies and general insurance companies. Other than this, there is also a schedule, Schedule C, which deals with the matters related to the auditor's report. But this Schedule C is not something which is specific to life insurance or general insurance. This Schedule C, which deals with certain specified matters in relation to the auditor's report, and this deals with both the types of insurance companies, life insurance as well as general insurance. Understood? Yeah. So now, in some time, we'll also be discussing all of these schedules one by one in more detail, and that is when you will also get the clarity as to what all of these schedules cover one by one. Yeah. So first of all, we'll just covering some of the basic aspects in relation to the insurance business. Clear? Yeah. So these schedules, you need to remember, these are very, very important, and these are particularly important because of the fact that some of the regulations in relation to one business you cannot consider to apply in relation to other type of insurance business. Okay. Now, audit of accounts of an insurance company is mandatory, like for any other company. Yeah, and these auditors' requirements or the requirements related to the audit of the insurance company, those all aspects have been covered herein. And the auditor for an insurance company, similar to any other company, has to be a chartered accountant. Now, moving on to the provisions related to the appointment of the auditors. Let's understand. Appointment of statutory auditors in respect of general insurance in the General Insurance Corporation of India and its subsidiaries and the divisions is made by CAG. CAG means the one which you see in case of PSUs. In case of PSUs, public sector undertakings, who appoints the auditor? It's the CAG. So same is the case in case of General Insurance Corporation of India and its subsidiaries and its divisions. And in case of others, auditor is appointed at the AGM after ensuring that the auditor satisfies the compliance requirements as per the IDA regulations. Okay. Now, one of the point which is again important to understand, an auditor can conduct audit only for 3 insurance companies, and out of these 3 limits, it cannot be more than 2 for life and 2 for general. Okay, I'm repeating this point. An auditor can conduct only audit for 3 insurance companies. Yeah, first. Number 2, these 3 insurance companies cannot be life insurance companies or cannot be general insurance companies in totality. Means all 3 cannot be life, all 3 cannot be general insurance companies. Which means 2 can be life insurance companies and 1 can be general insurance company. Or 2 can be general insurance company and 1 can be life insurance company. So this is the combination which is required to be followed. Okay. Remuneration and all of these aspects in relation to the auditor is something which is required to be assessed. Now, in respect of public sector insurance companies, you can say the public sector. And when I'm talking about public sector insurance companies, I'm not talking about public limited, because each and every insurance company has to be a public limited company. I'm talking about one wherein the public sector has got the investment in this. In a way, you can also say the government sector is the one which is having ownership. At times you get to see that the insurance company has got certain branches. And in respect of those branches, separate trial balances are prepared. And separately, those are audited, or auditing aspects are taken care of separately. However, in respect of private companies, again, when I mean to say private, so I'm not talking about private limited companies, because private limited company cannot be an insurance company. I'm talking about the ones which are privately owned. Privately means wherein the public sector is not the one which is having the ownership. So it's the private sector which is having the ownership. Therein, you will not generally find that the insurance company, even if they have got separate branches, are getting separately audited, because all of these aspects are generally centralized, wherein at the central level, you will see the audit will generally be taking place. Okay. Secondly, another very, very important aspect about the insurance companies happens to be the involvement of the IT environment. See, in today's scenario, when we talk about any entity or any sort of organization, I'm not limited to the insurance company. You can all understand the involvement of IT in the same. IT is significantly involved. IT systems are significantly required for a company to run its business, for a company to maintain its reporting requirements. And I'm not talking about regulatory reporting requirements, I'm talking about various internal reporting requirements which the company may be required. But for some of the companies, these IT systems may not be simple. They need to be very, very sophisticated. They need to be significantly used. And one of those sectors happens to be insurance sector, wherein the involvement of IT systems is very significant. Let's think about any insurance company. Let's think about any insurance company that comes to your mind. Just try to understand the number of customers with which they will have to deal. They deal with lakhs of the customers. They are not dealing with hundreds of the customers. They are dealing with at least thousands of the customers. This is the number of customers they will have to deal with over the period of time. And that's why to run the business in such an environment, and which also happens to be very dynamic, entity needs to have strong IT systems in place. Otherwise, entity will not be able to function appropriately. Yes or no? Yeah. That's why when it comes to the audit of an insurance company, involvement of this IT environment in the business of the company is required to be understood properly, and the auditor also needs to have strong understanding of the IT environment. Auditor also needs to plan his audit procedures in a manner that the IT environment of such type of company gets audited properly. Only and only then auditor will be able to carry out his audit properly. If let's suppose this IT environment is missed out in terms of understanding various aspects, in terms of auditing some of the processes which are involved, what will happen? This will significantly impact the audit quality. Yes or no? Yeah. Then I can see this query from Shraddha. She's asking, sir, Schedule 3, Division 3 of the Companies Act, when it is applicable, which formats apply as IRDA or Companies Act? See, the formats for insurance company are separate. Those are specified. First of all, please also understand that currently insurance companies are not within the ambit of Ind AS. When I say ambit, means eventually they will have to get into the Ind AS environment, but currently they are not following the Ind AS. So that's why when you move on to the Schedule 3 or this Division 3, that is not the specific schedule or the division for them. For them, they have their specified formats, which you can just check anywhere. So these schedules which are applicable to them are largely available. You can just have a look at them. Okay, now moving on to the next aspect, that is about CARO. CARO is something which is not applicable to an insurance company. So you better believe that at least one of the things is not required to be looked at in respect of an insurance company. But coming to the statutory audit, we talked about the involvement of the IT environment, and once the statutory audit is completed, the other aspect for any company or for any entity is about its audit from the perspective of tax, and which is something which is mandated from the taxation side, from the income tax side. That is called as tax audit. Yeah, again, something with which you will be familiar with. So tax audit is again very, very important area for an insurance company, and this is again something which is required to be carried out for an insurance company. Okay. So any questions, any doubts? Yes, that's true. Any insurance, any doubts in relation to whatever we have covered, you can just keep sending your queries. Now what I'll do is I'll just move on to the Schedule A. So that means now we'll be very, very specific in terms of our discussion to the life insurance business. So Schedule A to the regulations which deal with the life insurance business. This is something with which we'll start. Okay. So now moving further, applicability of accounting standards. So even though we are talking about life insurance business, when we will discuss general insurance business, you will see a lot of similarities. Yeah, so even though we are now currently discussing all of these regulations which are specific to life insurance business, some of these regulations you will also find similar to general insurance business. So that's why it will not only help us to understand about this requirement for life insurance, but also for general insurance. But that interlinking, I will not do right now. That will be done once we are done with the Schedule A and when we'll start Schedule B. Now, for a company which is into life insurance, which all standards are applicable? Indian GAAP. So you can say standards which are other than India's. Means the Indian GAAP which is in place. Yeah? You understand Indian GAAP? Means the accounting standards are applicable to insurance companies. India's as of now have not become applicable to them. That has been deferred for some time, and the applicability date is yet to be notified. Now, in respect of the accounting standards, all of these accounting standards are applicable except AS3 and AS17, wherein certain specifications are given in respect of insurance company. Moving further, some of the terms about the insurance company we have already discussed. Now moving further, onto the procedures or some of the requirements in relation to the insurance company. Number one, valuation. Now what I'm trying to do is I'm just taking you back to the understanding of the insurance business. Because in relation to an insurance business, there are a few things which are specified and which are very peculiar in nature. So that's why whenever we will be auditing an insurance company, some of those areas will be required to be focused on. So one of that area happens to be valuation. I will come to this valuation as to what do I mean by this valuation and what all things are required to be done by an auditor in respect of this valuation. One area is premium, over which we have had some discussion. One area is claim, over which again we have had some discussion. So now let's move on to the business model for an insurance company. Okay, so let's talk about ABC Insurance Company. And I'm calling it as life insurance company. So now we have life insurance company ABC. So this is the insurance company. And how will this insurance company make money? We understood that insurance company will need customers and the customers will have to pay premium to the insurance company. So I'll bring in the customers. Okay. Now, let's think about the business volume of an insurance company. If let's suppose insurance company has got 100 customers, let's suppose, will it really be beneficial to the insurance company? No. This may not be beneficial because the volume for insurance company should be significant. Because if you talk about one customer, and who is that customer going to be? That will be an individual. So what is the amount of insurance premium that customer will pay to the insurance company? It may be 10,000, it may be 1 lakh, maybe 2 lakh, 3 lakh, yes or no? And then this insurance company needs to make money every year. So will this number be of any use for running the business? No. So that's why, what should I do? I should cut this 100. I should say the number should be running into lakhs or thousands. Yeah? The number should be running into lakhs or thousands. Correct? Yeah? That is how the insurance company should target the number of customers that it may have. Should be running into lakhs. Now, considering the business model of the insurance company, what will happen? All of these customers will pay premium to the insurance company. Let's suppose on an average, okay, again I'm not specific, let's suppose on an average, every customer is paying say 20,000 per annum. 20,000 per annum to the insurance company. So this premium is what? This is nothing but the revenue of the insurance company. This is the income, revenue for the insurance company. Operational revenue actually. Now, as against this, what is the expenditure for an insurance company? What is going to be the expenditure for an insurance company? Salaries. Insurance company will be required to pay salaries to the staff. Then insurance company will also have a lot of other expenses, admin expenses. Insurance company will also have marketing expenses. All of those expenses will be the cost for the insurance company. Correct? Another very important item, or you can say another very significant component in terms of cost for the insurance company is what? Is the claim amount. Yes or no? Yeah? Is the claim amount. Insurance company would always want that nothing should happen to the life of the customers. Because if there is any mishappening, then the insurance company will be required to pay claim. And that claim amount will become a cost to the insurance company. So this claim amount is nothing but a cost to the insurance company. And this claim amount will not be limited to 20,000. When a customer is paying 20,000 per annum, he will take the risk cover, let's suppose for rupees 10 lakhs, let's suppose for rupees 1 crore, let's suppose for rupees 5 crores. So, if the insurance company is getting 20,000 from the customer, it's not that the insurance company will be required to pay back only rupees 20,000. No, it may be exponentially higher. Yeah. So let's suppose if the insurance company on an average is required to pay rupees 20 lakhs as the claim amount. In this scenario, just think about the business model. Do you think the insurance company will make money? Company is taking 20,000 per annum from the customer, but may be required to pay 20 lakhs to the same customer. Do you think the company will make money? No, company will not make money. And the company will not make money if the company will be required to pay this amount to each and every customer. If the company is required to pay this amount to each and every customer. Correct? But it is not so. It's not that this mishappening will happen to, or this unforeseen event will arise in respect of each and every customer every year. Do you think that is possible? No, that is not possible. That loss of life will take place for each and every customer. No, that's not possible. So that is why what will happen? Insurance company will be getting this premium from lakhs of customers, but may be required to pay this claim amount only to few customers, or only to say hundreds of customers. So let me just make hundreds of customers. Yeah. Insurance company will be required to pay only to few customers as against the number of customers from which it will be receiving the premium amount. And therein the insurance company will make money. Yeah. Now, because of this, an evaluation is required to be done. And this evaluation is required to be done by the insurance company in respect of those unforeseen events which may arise during the year and wherein the insurance company may be required to pay the claim amount. So again, it's the business model wherein the valuation needs to be done in respect of this claim amount which the insurance company would be required to pay the claim amount. So how will this amount be computed? Let's think about it once again logically. First will be the probability. First will be the probability, or you can say out of these lakhs of customers, insurance company will have to take a probability or compute the probable number of those customers wherein the claim amount will be required. Yes. Number two, the amount. Now, depending on the number of customers insurance company will have, depending on the terms the insurance company would be having with the customer, this claim amount would vary. Correct? So these two exercises are very, very significant in relation to the business of the insurance company, because this will drive the entire business model of the insurance company. And for this purpose, a simple calculation will not be sufficient. A thorough evaluation is required to be done, and a detailed valuation is required to be carried out which is done with the help of actuaries. Which is done with the help of actuaries. So you can say actuarial valuation. Actuarial valuation is required to be carried out in respect of all of these aspects by the insurance company, and which happens to be very, very important item for any insurance company. So that's why whenever we will be engaged as an auditor for an insurance company, let's think about some of those areas which need to be focused upon. What are those areas on which an auditor would always want to focus on? Of course, the one which are directly connected to the business. Of course, the one which is revenue, that means premium. Second is claim amount, because that is the direct cost to the insurance company. Yeah. And third will be about understanding of all of these aspects. Means this process which the company will be having, the system which the company will be having in respect of this entire valuation is what the auditor will have to focus on. Because this is going to be a significant risk area for an auditor in respect of insurance business. Yeah, you all understand significant risks. You all understand the significant items in a business. Yeah. So these three are the significant areas, significant risk areas for any insurance company on which auditor needs to focus on. Clear? Yeah. So you can see a few queries I have been missing. I think I answered. Shraddha is asking, IDA only specifies format to prepare the financial statements. Other accounting framework are as per the Companies Act only. See, as I told you that Companies Act is applicable to the insurance company. Okay. Over and above Companies Act, various other regulations are also applicable to the insurance company, be it IDA or say any other regulation. So till the time there is no conflict in between any of these regulatory requirements, all of those regulations will have to consider. When you are specific to the accounting framework, I am sure you are talking about the accounting standards only. So in terms of the accounting standards, we have discussed as to which all accounting standards are applicable. Correct. But Preeti is asking about the maximum number of audits. Of course, so the maximum number of audit limit for an auditor is specified. And that audit limit also specifies which all audits are not covered there. Insurance companies audit is not an exclusion from the same. Yeah. So accordingly, you have to compute your number every time. Alright, Preeti? Okay, so we discussed about some of the peculiarities in relation to the insurance business. Now, let's try to understand what all audit procedures will be applied by the auditor when it comes to the audit of any insurance company. So we'll understand all of these items one by one, looking at some of these line items only, so these happen to be the most significant areas in relation to the audit of any insurance. So first, let's talk about the premium. For an insurance company, what will be the most significant item for an auditor? Of course, the revenues. The revenue for insurance. That means the premium. Now, in relation to the premium, let's think about the audit procedures. What all audit procedures need to be carried out by the auditor? So we are now discussing about premium. Okay. Now in relation to the premium, or in relation to now any item in the financial statements of an insurance company, we need to go back to the basics of the audit, which you would have covered under the auditing standards. Yeah. So what are the basics of the audit in relation to any company? Or forget insurance company, I'm saying any company. What is the first thing you'll do? You'll understand the business. You'll understand the processes. You'll understand the risks which are existing in those businesses, in those processes. Yes or no? Then you will also understand the controls which the management would have implemented in relation to all of those risks which have been identified by the management only. It's not about the auditor, which have been identified by the management only. So all of these understandings you will obtain as an auditor. Why? Because only when you obtain this understanding as an auditor, you will get to know about the areas you need to focus on. Okay. Now, in relation to insurance company, we have discussed all of these things. We have understood about need for understanding the business, need for understanding the processes. We have also understood as to what all significant processes are involved, what all risks could be there in relation to insurance company. And one of that significant processes which we have identified is the premium. Now, in relation to this premium, what is the next step which the auditor needs to focus on? Again, same thing you need to do. Whenever we identify any significant process, so what is the thing that you will do? Now, premium being a significant process. Premium is what? Premium is again a process for this company. This is nothing but a process for a company. So now for this premium, auditor will obtain its detailed understanding. Auditor will identify the risks. So when the auditor identifies the risk, that doesn't mean that auditor needs to do that on his own completely. Auditor will also understand what all risks have been identified by the management. In relation to all of these risks which would exist, what all management controls are in place. That means the control assessment, or in other words, which is also called as RCM metrics, is what the auditor will understand. RCM metrics. RCM metrics means risk control metrics. So this is one thing which the auditor will try to understand. Now these are all general audit procedures which would apply to any process. So that means same general audit procedures will also apply to this process. Correct? Now, what is the next thing which the auditor will do? Testing of controls. Testing of controls in relation to this process. And depending on the testing which he will perform, he will come to a conclusion whether the controls in relation to this process are operating effectively or not. Because the extent of the audit procedures in relation to audit of premium will be driven by the approach of the auditor. And what can be the approach of the auditor? To place reliance on controls and not to place reliance on controls. So auditor can follow two types of approaches. Either he will say, okay, I want to place reliance on the controls of the management, or he will say, no, I will not want to place reliance on the controls of the management. And this will be driven by the fact that the controls are operating effectively or not. So if the controls are operating effectively, auditor will follow this approach. If the controls are not operating effectively, auditor will follow this approach. Depending on the approach that the auditor follows, what will be the next thing? If he is placing reliance on controls, then he will definitely cut down the extent of his audit procedures. So the extent of the audit procedures will be dependent on this approach. He will perform more audit procedures under which scenario, under which approach, under this approach. And he will perform lesser audit procedures when the controls are operating effectively. Clear? Yeah? Now, this is about the control testing and about placing reliance on controls of what, and which will help the auditor in deciding his extent on audit procedures. After which, what is it that will start? Substantive testing. Substantive testing, or you can say substantive audit procedures, wherein he will do the test of details, he will perform analytical procedures. Correct? Yeah. Now, all of those basic requirements in relation to an audit are no different in case of an insurance. So this is one thing which you need to understand and appreciate and apply over here. So whenever it comes to an insurance company, just don't think that all of these things will go off. No, they will continue to remain and they will apply to each and every type of entity. The only thing is that all of these procedures under the substantive testing are going to be specific to the line item which is getting audited. And this is again very, very simple for us to ascertain. And I would request you to also share now some of the audit procedures which come to your mind in relation to audit of payments. So when it comes to audit of premium, just think about the audit procedure which you would want to perform as an audit. Okay, yeah. So you can just start sharing those audit procedures. In the meantime, I am also sharing some of the audit procedures which should be done. Okay, so I am also just thinking about this line item, and once I think about the line item, I'll just think about the audit procedure also. So premium means an amount which is collected from the customer. Okay, so if I have to audit premium, I need to look at various assertions. Yeah. So now I am towards the test of details. Okay, wherein I am following the audit based on assertions approach. So looking at various assertions, I am now trying to design my audit procedures, and you need to help me out. So you can just start sharing the audit procedures which come to your mind. So first procedure that I would want to perform will of course be on completeness. I would want to check about the completeness of revenue, whether the revenue is recorded fully or not, and how can that be done? Insurance company will have the data of the number of customers it is having. So I'll pick up that data from the customers database. Number of customers. And I will then multiply this with the amount of premium. which the insurance company charges from one customer. So the number of customers which the insurance company is having multiplied by the amount of premium. Okay, let's suppose this amount comes out to rupees 10 crore. Let's suppose this amount comes out to rupees 10 crore. Now this is what? This is the expected amount of revenue as per the auditor. And then what will I do? I will compare this amount with the amount of premium which the insurance company would have shown. And any difference between these two will then be compared. Yeah. So what do we call this procedure as? Reconciliation of this revenue with the number of customers, with the average amount of premium. This is nothing but the average amount of premium. So this is one of the audit procedures which I can perform as an auditor. Correct? Now, it may also happen that amount which I have computed is rupees 10 crore, but the company has shown an amount of 15 crore. There is a significant difference. There is a significant difference which may arise. Shraddha has also shared one procedure. Shraddha is saying we can check whether the premium is collected for all policies in existence or not. Very good. Vijaya Shri Rashri is asking, sir, substantive testing will come to existence for both. Obviously, yes. Whether you place reliance on controls or not, in both the cases, substantive testing will have to be performed. Now, coming to the procedure which Shraddha only specified, and the same thing was about to be picked by me, and that is about the policies. Now, when I multiplied the number of customers with the average premium, what did I do? I didn't take regard of various policies which could be in place and which may have different terms attached to them. It's not necessary that the company will have same types of terms, same type of premium in respect of every policy. Insurance company will have so many policies which are going on. So what should I do? I should look at this reconciliation on the basis of number of policies. And I should do this computation of number of customers into average amount for each and every policy. And that is the amount which I should compare with premium, because that will give me the better insights. Yeah, and that amount should be closer to the amount of premium. The other way is we can also check its computation, because as we discussed that now the companies need to have sophisticated IT systems. So they will also have a detailed report in terms of computation of this premium. So as an auditor, what can I do? I can go and check that report as to how this insurance premium would have been computed. Correct? Another procedure Shraddha is saying can be performed whether premium is collected for all policies or as per the pre-decided amount in the contract, or is there any shortfall to that premium? Whether premium collected from a particular policy holder are credited to that policy holder account only and not to any other policy holder. Yes, that is also correct. So now there can be so many audit procedures, and very good that Shraddha has been sharing. I would request all of you to share the audit procedures which come to your mind. Now, the next thing, and depending on the assertions, you can just think about the audit procedures. What is the next thing you will think about? As an auditor, you will check that, of course, this is the amount of revenue which has been put. Now, whether this has been collected or not. So, one is about accrual. So, the revenue has been accrued, revenue has been put. But whether this is getting collected on the due dates or not. Insurance company will not be running the business of giving a credit of 30 days, 60 days, 90 days. No, it's not now they operate. they will always have a due date. That on this due date, premium becomes due and which is then required to pay. If there's a default, then a period of say 15 days, or you can say this is something which is a kind of window which is made available to the customer. If he pays within that time period, it's fine. Otherwise, a penalty may be levied, a surcharge may be charged, or the policy may lapse, or the policy may get surrendered. So there are a lot of things which may be attached to the terms of the policy, which need to be evaluated by the insurance company and which needs to be checked by the auditor. Next, Preeti is saying, we can also check as an auditor whether the forfeited amounts on policies discontinued also form part of the income. So there could be certain policies which are surrendered by the customer. Okay, or certain policies which have got lapsed. So there could be certain amount which the insurance company would have earned on that. Right? Because some money which the insurance company would have paid to the customer, if the policy would have gone on till maturity, has not been paid now, so what will the insurance company do? Insurance company will book that as income. So whether this revenue includes that part or not, and what proportion is that part? Because one is the premium in the normal course, something we discussed, and second is about all of these types of incomes which the company has been getting in terms of policy lapse, in terms of policy surrender, and all of these aspects. Third, now there is also a possibility, and that's why we need to focus on the IT systems, and that's why we need to focus on the control environment. See, for companies like insurance companies, or you can say companies which are into this type of sector, having an understanding of control environment and having an understanding of the operating effectiveness of the control environment becomes extremely important. This is very, very crucial. And as rightly mentioned by Shraddha, please understand that a company which is having lakhs of customers, which are paying premium, let's suppose on a monthly basis, on a quarterly basis, on an annual basis, and same customers are required to pay premium over a period of years. Yeah. So please imagine the reconciliation of the amount which is received as against the amount which should have been received. This is extremely important. Otherwise, what will happen? Otherwise, company will not get to know as to what was required to be received and what has actually been received. One. Secondly, for this reconciliation, do you think a person can be appointed and he can just do this reconciliation manually? All of these systems cannot work in a manual environment. It will be practically impossible to run all of these systems in a manual environment. That's why companies' systems, IT systems, need to be very, very strong, which can take care of all of these requirements, and wherein such type of risks will go off. And what is the risk? The premium has been collected, let's suppose, from A. Premium has been collected from A, but company has recorded that premium as a receipt from B. A paid the premium, but when it came to the company's records, it's reflecting in the records of B. Yeah, so two records have gone wrong. So this is one risk which can definitely be avoided by having strong control environment in place, by having some strong internal IT systems in place. And this is a must. This is a must. Okay. Next, as mentioned by Vijay, Vijay is saying it's also very, very important for any company to ensure that they are following all the compliances for the period which are applicable to them. And for an insurance company, these requirements are huge. So that's why compliance mechanism, or you can say the compliance check, is again very important area for them. So as an auditor, we need to check that all the compliances, I'm not talking about all the compliances related to the company, because now we are specific to premium. We are specific to premium. So all the compliances which were attached to the premium, whether those have been complied with or not. Correct? Yeah. Another thing, and which I specified, okay, which I discussed with you, and which is extremely important in case of an insurance business, happens to be the calculation of premium. See, one point is, of course, the premium, whether the premium has been appropriately charged or not, premium has been charged from all the customers or not. Next thing, of course, is to check the calculation of premium. Whether the calculation of premium is done appropriately as per the internal policies and procedures of the company. Now, what is the amount of premium which the company needs to charge is not something over which auditor can have a say. There can definitely be certain regulatory requirements attached to this. But as an auditor, when he will check whether this amount is received appropriately or not, what does he need to check additionally? That what was this amount which was required to be charged? That means the calculation of premium. Let's suppose if the company was to charge rupees 11,000 from a customer, but the company has been charging only 10,000, or the company has been charging 15,000 from the same customer, how will the auditor get to know about it? By checking the calculation of the premium. And another very important area which we just touched upon happens to be the actuarial valuation. Now, all of these calculations of premium which the company will do, company will have a team. Generally, you'll see insurance companies will have an in-house team of actuaries, because this computation is not a simple exercise. This is a careful evaluation, detailed calculation which is required to be done by the valuation specialist, and this is again one area which the auditor needs to audit. It's not necessary that all the actuaries which the company will have are in-house. The company may also have a set of actuaries which are external. So some of the actuaries could be internal to the company who are on the payrolls of the company, and some of the actuaries could be external to the company. Now, the moment we talk about external actuaries or the third parties, so the policies, procedures which the company has been following in respect of the competition, or in respect of all of these calculations, or in respect of exchange of information with those third parties, is again what is required to be looked at by the auditor. The competence of those third parties. What are these third parties? These third parties are nothing but are actually the management experts. Yes. So when it comes to the management experts have been engaged. As an auditor, what will he do? He will evaluate their competence. He will evaluate what all work they have done. Yeah, auditor may need to have a discussion with all of those experts. Correct. Next, another very important area is about the recognition of income. So all of these aspects that we have discussed as an auditor were all limited to the procedural part. But when it comes to the recording of income, which is discussed, that the accounting standards are applicable to an insurance company. So whether the insurance company has put the revenue, whether this premium has been recognized, is that in line with the accounting policy? And whether that accounting policy is in line with the accounting standards or not. Who will take care of this? Auditor will have to perform this audit procedure. Yeah. Next. There are certain reconciliations in respect of revenue or in respect of this premium which the auditor can do, and which will only help him to understand about this computation in a better manner. Let's try to focus on that. There are few records in terms of the policy documents which the auditor will read to check, to verify all of these amounts. Over and above this, auditor would also want to check if there are ways through which he can reconcile this entire computation. Reconcile this entire computation which is internal to the company, because all of these computations which the auditor will audit are what? These are all internal computations. All those computations which the management would have done internally. Yes or no? Now, how will the auditor extend his comfort? He will get more comfort over this computation. Let's try to understand that. Management may be reporting some of these amounts, some of these data to the regulatory authorities also. Insurance companies may be required to report this data about the number of customers that they have, the amount of premium which they have been collecting to the regulatory authorities. For example, if they are filing their GST returns on a monthly basis, they are reporting this data. Yeah. So what is the next step which the auditor can do? With this external reporting which the management has been doing, auditor can perform the reconciliations. Means whether the records, whether these calculations, whether these workings which the management has been having internally, are those consistent with the amounts, calculations which are getting reported externally by the management? And if there are any differences, what are the reasons for those differences? Correct? Yeah. Another way for an auditor to check about all of these aspects. And Vijayashri is saying, sir, whether there is consistency from period to period. Yes, of course, consistency should be there in respect of the accounting policy which they are having. Consistency should be there in respect of the premium amount which the company has been collecting and recording in respect of the same policy which has been going on. Because if the policy remains same, the terms remain same, then the way that is getting recorded, the amount which is required to be recorded, that should also remain consistent. Now, these are all some of the audit procedures which the auditor can perform in respect of the premium amount. Okay. At times, it may also be possible that the customers have been paying the premium amounts in advance. Now, appropriate accounting needs to be followed for this. Let's suppose if the customer has paid the premium amount for next 3 years, can that entire amount be recorded in the current year as income? The answer is no. Why? Because that is something which is in the nature of prepaid income. So can that entire amount be recorded as an income? No. So this is another area which the auditor needs to check. Yeah. So in respect of the policies, in respect of the terms which the company will be having, auditor needs to ensure various aspects of which some of these audit procedures get discussed. Correct. Having said that, there are various legal requirements or there are various regulatory compliances which may be specific to the company, which the auditor can then best understand by understanding the process, by understanding various regulatory requirements the company would have been following, and on the basis of which he will then design his audit procedures. Fine? Clear? Yeah? Okay. Now, moving on to the next item, and which is again very, very significant item in the financial statements of any insurance company, and that is about claims. Now, for premium, we have discussed so many audit procedures, and I'm sure you would have got some perspective as to how do we design an audit procedure. So, can you now tell me some of the audit procedures? Can you now tell me some of the audit procedures that come to your mind in respect of the claim amount? Just give me one. In respect of the claim amount, what are those audit procedures which you will perform as an auditor? Yes. Over to you now. Once again, you can just start sharing your audit procedures. So now, I'll just quickly repeat because some of the audit procedures will get repeated. Similar to what we do in case of the premium, we'll understand this process, we'll identify the risks which are attached to this process, we will also understand the management controls which are there in relation to that process. Then we'll also obtain an understanding by performing a walkthrough. After the walkthrough is performed, what do we do? As an auditor, we'll do the test of controls, on the basis of which we'll get to know whether the control can be, control reliance approach can be there, or we need to take no control reliance. So that will decide the extent of the audit procedures. So all of those audit procedures will continue to be there in case of claims. Those are no different. Once the claims have been assessed in terms of the control testing, then we'll move on to the substantive testing part, wherein some of the audit procedures which we can design are specified by Shraddha. So Shraddha is saying, so we can check whether the claim amount is processed only for those policyholders who have applied for this. Very good. Very, very important point. Now, the risks which any company may have could be of various types. Yes or no? Yeah. Now, there is one risk which is called as fraud risk, which is a very, very significant risk, and over which auditor needs to design certain audit procedures depending on the risk assessment with the auditor will do. And let's suppose if there have been any such situations or any such instances in the past in relation to an insurance company wherein the insurance claim has been processed for the policyholders who have not even applied for the claim. What does this indicate? A kind of fraud event. Yes or no? Because when should an insurance company pay the claim amount or process the claim amount or even consider the claim amount? Only and only when it's been applied. So if this has not been applied, but the claim is getting processed, it's a significant risk. Correct? Okay, next. Whether the claim amount is processed, okay, sorry, this is repeated. Then Kalyani is saying, so we can check whether the claims have been passed only for those who had paid premiums regularly. Again, very important point and something which is very, very commonly seen. Yeah. Every time we hear some news about the insurance companies that some of the claims were not processed by them. Why? Because the customers were not paying their premium on time. Now, this is something which is dependent on the terms of the policies, which is dependent on the policies and procedures of the company. Means their internal policies, procedures, which they follow, on the basis of which they process the claims. So if the customer was, let's suppose, did not pay the last payment installment, so does the policy of the company allow the processing of the claim? Yeah, all of these are nothing but, again, the kind of internal control environment which we need to focus on. Then, Shiranjani says that we can also check whether claim amount has been dispersed after appropriate documentation. Very good. Now, for an insurance company, processing of claim is a very stringent exercise, wherein their internal policies will require some set of documentation to be maintained, without which claim cannot be processed. And generally, you'll see that insurance companies will take a lot of time, at least a month, yeah, for processing of claim. And why is that so? Because they need to have thorough documentation before processing the claim. So, as an auditor, what do we need to check? We need to check all of these aspects. But please remember that all of these aspects which we have been talking about will be done by the auditor on a sample basis. Can we check it on a 100% basis? No. So only some of the samples we need to pick up. Then Shraddha is saying, so we can also check whether the claim amount measured is accurate or appropriate to the policy holders. Yes, that's great. PT is saying, so we can check first correctness of the claim in terms of the policy is current, premiums have been paid on time. We check the grounds of making the claim, cross-checking the nominee. Very good. Yeah. So it's a sort of checklist which the auditor can check. And please remember that all of these aspects which we have been discussing would also have been done by the company. So as an auditor, you don't need to just reinvent the wheel. So you need to just check what all things, what all policies and procedures were there in place, which the company should have followed, and whether the company has really followed all those policies and procedures or not. Because if any of them have been missed out, that will become a problem. Okay. Next. Shraddha is saying we can also check whether the measurement of claim amount is done appropriately. That's correct. And measurement of claim amount is something which is linked to the documentation, something which is linked to the internal policies and procedures which the company is required to follow while processing the claim. Correct? Okay. Then Shraddha is saying we can also check, is there any due from the policy holders who have applied for the claim proceedings? Of course, because if there will be any due from the policy holder who have applied for the claim, generally what do you find? That the claim is not processed. Till the time the policy is not clear in terms of having all of these premiums paid on time, all the premiums being paid completely, generally what do you see? Claims are not accepted or claims are not processed. Yeah. So here again, what can the auditor do over and above some of the points which we have specified? That's the reconciliation. So reconciliation in terms of the claims which have been made and the amounts which have been paid into the amount paid, or you can say processed. By payment, I don't mean to say the cash which is paid out. By payment, I mean to say the amount which is required to be processed or the amount which has actually been processed. Correct? Here again, some of the other audit procedures which the auditor can focus on could be about checking the authority metrics. So this is one area which the auditor would have checked while performing the test of controls. But some of these audit procedures also, you can just, maybe design. So let's suppose tomorrow if question requires you to design an audit procedure. So this is also one of the audit procedure which you can also design, and that is about checking the authority metrics. So let's suppose if the claim is getting processed, whether the claim is getting processed, whether that claim was appropriately approved from the appropriate authority which was required to process that claim. That is again very, very important. Next, here again, in respect of claims, certain legal compliances would be required to be followed by the insurance company. Similar to what they would do for premium, they would be required to follow something for the claim amounts. Whether all of those legal requirements, whether all of those legal compliances have been appropriately taken care of or not. So as an auditor, again, we will check that area. Yeah, we will check that area. Yes or no? Clear? So this is about some of the audit procedures which need to be followed by the company in respect of the claim amount. Fine? Yeah. So now I think we can just break for some time, and before we break, if you have any questions, any doubts, you can just let me know. I think I've stretched this session a bit, so we can now take a break, and after the break we will continue with our discussion. But if you have got any questions, any doubts, you can let me know. Alright, so what you can do is you can just post your queries over here, and let's take a break now. After the break, if you have any queries, any doubts, we'll discuss your queries, doubts, and then we'll continue with the remaining part. Alright, so let's take a break of 10 minutes. Yeah. Hi, welcome back. So we'll now continue with our discussion. So we discussed about two very important items in the financial statements. Now we'll move on to some more aspects. Okay, so some of the next aspects which the auditor can always focus on could be related to various other line items in the financial statements. I am not getting specific to all of those items because all of those items we all understand. Now this could be related to the commission payable to the agent. Now another area which could be relevant could be about commission payable to the agents. Now who are those agents? These are the agents who are getting the customers to the insurance companies. So one of the line item which could be there in their financial statements, in their P&L, could be about the commission expense in relation to those agents. Now let's think about the audit procedures which are required to be performed for the same. Now when it comes to the commission expense in relation to the agents, so what is it that you will get engaged in as an auditor? So one of the important aspects that you will want to check is whether the amount has been recorded appropriately and in respect of all the agents or not. Because none of the agents should be missed out. Correct? Yeah. So how will you do this? So as an auditor, what do we need to check? We need to check this computation of the commission, and we also need to check whether all the agents have been considered for the purposes of computation or not. Secondly, we also need to check whether there are any policies or internal procedures of the insurance company which do not allow commission payment to those agents in respect of whose customers premiums are not getting received, or in respect of customers which those agents would have referred, the premiums have been outstanding or the premiums are not getting paid on time. Yeah. So this is another one area which we'll have checked as an auditor. Yeah. So this is about computations. Once again, similar to what we discussed. Secondly, if the commission is getting paid, now because this sector is specific to regulations, there are definitely certain limits which are attached in terms of the commission which is paid. So insurance company just cannot pick and choose or just cannot give any sort of amount as a commission to any of these agents. There are certain prescribed limits within which the insurance premium, within which the commission can be paid to all of those agents. So that computation is again required to be checked by the auditor, and that compliance is required to be evaluated by the auditor, whether the company has been doing that appropriately or not. Okay, yeah. Here again, one of the very common thing which you will find for any insurance company will be about the system. See, all of these workings, all of these points, whether we have talked about premium, whether we have talked about claims, or whether we are talking about commissions now, all of these are not simple computations to be done. All of these are quite sophisticated calculations for which appropriate systems, or you can say appropriate IT systems, need to be in place. Only and only then auditor will be able to get comfort whether these are getting accounted appropriately or not. That Shraddha is saying that this should not merely be a book entry. It should be, means its genuineness should be tested by the auditor. And how can the genuineness be tested by the auditor? By checking whether the commission agent or the broker is actually registered with the company, whether the commission agent or the broker is authorized to get registered in respect of this business or not. That's about checking the regulatory compliance which may be attached to this. Correct? So these are some of the aspects which can be better understood by the auditor first of all, because again over here, auditor will have to understand whether all of these things are taken care of by the management of the company or not. At times, even though everywhere we have been talking about the understanding from the management, at times it may also be possible that the management is not aware of any of the regulations and which are then getting missed out. So that's why auditor cannot just get limited to what all management is doing. Auditor also needs to have a thorough understanding of all the compliances which the insurance company needs to follow. Because in case, let's suppose the management is doing non-compliance of certain things, and the auditor is also not aware of this. So what will happen? Will that item get caught? No. So that's why thorough understanding of the regulatory compliances in relation to the business of the company is also necessary on the part of the auditor. Only then he will be able to add to something which is getting missed. Clear? Clear on this? Okay. Now, what can be the next item which could be there in the financial statements? Compensation, employees' compensation. Now, when it comes to the employees' compensation, when it comes to the salaries which are being paid, now this is no different from any other company. So, all of those audit procedures which one would perform in respect of salaries, or we can say employee compensation for any other company, will apply to insurance company also. So can you just start sharing some of the audit procedures which come to your mind in respect of the employee compensation for an insurance company? Let's think about it. See, all those items are very important for an auditor. So let's think about it. For employee compensation, what is the audit procedure which the auditor will perform? Let's think about it. First, here again, the auditor will perform the reconciliation of the headcount with the average salaries which are paid out. Auditor will perform the testing of the salary by looking at the appointment letters on a sample basis. Correct? Auditor will perform testing of all the regulatory compliances like PF which may be required to be paid, ESI which may be required to be paid in respect of the employees, whether that is getting paid on time or not. Auditor will perform testing of some of the computations in relation to the employees' salaries which are getting paid to them on a monthly basis. Yeah. So all of these computations which the management would have done are required to be checked by the auditor. Any other procedure that comes to your mind? There can be so many procedures because I'm sure on lower salaries you will have so much clarity. Shraddha is saying whether employee compensation is paid to those who are actual employees or not. That's correct. So another very important area, and which also covers the fraud risk, is about the salary payment to the actual employees. And how can this check be performed? This check can be performed by looking at the appointment letters of the employees, by doing a physical verification. So generally, what an auditor would do is, auditor would meet some of the employees on a sample basis. It's a meeting. Meet means he'll just go meet them to check that yes, these employees are actually existing with the company. Correct? Now, this test cannot be performed by the auditor for all the employees. That is not possible. Fine? Okay. Another item which can be tested is about the salaries payment to those who are on the payroll, something which Kalyani has specified. Yes, Kalyani, that's true. This is something we have discussed. Very good. Right? Okay, so I'm not getting into too much technicalities of one of these types of areas because this is something you have already covered, and this is not something which is very, very peculiar to an insurance business because irrespective of the business, all of these procedures will largely remain the same. Okay, Next is about the interest and the bank charges. Interest means the interest expense. So insurance company could also have borrowings over which interest is required to be paid. So now in respect of that interest computations, testing is required to be done, and it also requires to be checked whether the interest is computed in line with what the borrower has been charging. Bank charges which have been levied, whether all of those have been accounted for appropriately. Correct? Similarly, depreciation, whether the depreciation has been charged appropriately or not, covering all the items of PPE in respect of that company. Okay. Next, interest, dividend, or the rental income which the insurance company may have. This is also required to be audited. So let's understand some of the audit procedures which we will perform. Say for example, if the rental income is being earned, say on a property which was lying vacant and that's been leased. Now what will the auditor check? Rent agreement, whether the accounting of rent is as per the accounting standards or not, whether the rent is actually getting received or not, correct? Whether the compliances like TDS, GST, all of these are being taken care of by the management of the company or not, correct? Yeah. All right, so I think we discussed certain areas. Similarly, there could be various other items. It could be about legal professional charges, it could be about operating expenses, for which we can design the audit procedures. So I think we have discussed quite a lot in respect of various type of audit procedures, in respect of various line items. So I'm not really picking up each and every line item in relation to the insurance business. Fine. So now moving further onto the disclosure requirements. So now for the Schedule A, you remember we were discussing about Schedule A. Schedule A was the one which was specific to the life insurance companies. For this, we were discussing Part A, which was about preparation of the financial statements. Now for these financial statements, we just continue and we'll see what all requirements are there. So the next part deals with the disclosure requirements. So let's understand some of the disclosure requirements which have been specified in relation to the financial statements of a life insurance. Now disclosure will first of all start with the contingent liabilities. Contingent liabilities, as we all understand, these are no different from any other company. Guarantees which may be given by the which may be given on behalf of the company, statutory demands, liabilities due to some litigations. It could be because of tax, it could be because of any other non-compliance for which the company may have received demands. It could be also in respect of underwriting commitments which are outstanding, or some of the claims which are not yet acknowledged as debts. Yeah. So contingent liabilities are required to be disclosed. Actuarial assumptions. Now I'm not talking about contingent liability, I'm talking about the disclosure requirements in the financial statements. Actuarial assumptions for valuation of liabilities. As we discussed, that actuarial valuation is a very, very important area for any insurance company. Yeah. And when it comes to the valuation, the assumptions which are used they become the base for the computation. They become the base for the valuation. So that's why disclosure of all of those actual assumptions which have been used, which have been considered for the valuation of liabilities are required to be disclosed. Encumbrances to the assets of the company are required to be disclosed. Commitments. Now this is one area which is similar. So whether you talk about these commitments, whether you talk about encumbrances, whether you talk about commitments for the outstanding amounts for the loans, investments, this is something which you'll see for any other company also. Now, if the company is having debt securities, then the basis of amortization claims which would have been settled and the period for which they have been unpaid are required to be disclosed. So I'm just looking through some of these disclosure requirements. Value of contracts in relation to investment for purchases where derivatives are pending or sales where payments are overdue. Operating expenses which are in relation to the insurance business are required to be disclosed. Computation of managerial remuneration, this is something which you will do for any other company also. Historical cost of those investments which are valued on fair value basis, depending on the regulatory requirements which the company may be having. So all of these disclosures are required to be given. Over and above that, another very important disclosure happens to be in respect of the significant accounting policies. Now, this is one area which is very important. That is about significant accounting policies which would have been followed by the company in respect of preparation and presentation of the financial statements. Correct? It's a very, very important disclosure. Very, very important disclosure for any company. It's not limited to insurance company, any company. Why? Because it reflects the basis which has been considered for the preparation of the financial statements. It clarifies, it specifies about various items which have been recognized, measured, disclosed in the financial statements. And these accounting policies need to be consistent year on year. You all know about it, that the accounting policies need to be consistently followed by a company year on year. And they are considered to be an integral part. Yes. And whenever there is any departure from the accounting policies in respect of the application in the financial statements during the year, then the same is required to be disclosed, along with the reasons for such departure. Generally, you will not see this disclosure because no company would do this, or no company would want to do this. That they have some accounting policy, but they are not following this accounting policy. That is being considered to be a very serious non-compliance in respect of various accounting standards which are in place. Okay, clear? Next is about some more disclosures over and above these disclosures that we have discussed. And these are very specific to the insurance business. First, investments made in accordance with any statutory requirement should be disclosed separately together with its amount, nature, security, and any special rights in and outside it. So it's all about giving the breakup of the investment. Yeah, wherein you are giving the disclosure about the amount. Of course, amount will be there, but when you are giving the breakup of the investment, you are giving the amount of that particular investment, and you are also specifying the nature of that investment. Segregation into performing or non-performing investments. Why? Because this is again important area for the purposes of revenue recognition. This is bit similar to what you understand in case of non-performing assets. So over here also you have got some non-performing or performing investments for which you are giving the segregation. Percentage of businesses sector-wise. Businesses sector-wise means in which particular sector concentration of insurance is paid. So that is again required to be disclosed a summary of financial statements for the last 5 years in the manner which is prescribed by the authority. Now, which authority is this? Data. Basis of allocation of investments and income thereon between the policyholders account and shareholders accounts. This is required to be disclosed. And certain accounting ratios, you can also say some of the KPIs or some of the important ratios which are considered important by the authority. Which authority? Again, over here, authority means the data. Those are required to be disclosed. Yeah. So all of these disclosures are what? We are talking about disclosures which are required to be given, and all of these happen to be the mandatory disclosures in respect of the financial statements for any insurance. Now moving further, for this Schedule A, Part 3 deals with general instructions. Now, what are these general instructions? General instructions will talk about the figures which you will consider in thousands or say rupees, or the comparatives are required to be given, dividends are required to be considered, provisions are required to be considered. So this is all something which is actually captured by you when you will be following the accounting policies of the company in a consistent manner. So that's why I'm not really getting into too much details around it. Now, next part is very, very important. Management report. To the financial statements of an insurance company, a management report is required to be attached. This is required to be attached, and this is something which is authenticated by the management. Authenticated means something which will be signed by the management of that insurance company. And let's understand some of these contents, and then we'll talk about as to what is the relevance of this report and why is this report being given. Let's look at some of the few contents first. Confirmation regarding continued validity of registration granted by ICAI. Confirmation that all the dues payable to statutory authorities have been duly paid. Confirmation to the fact that shareholding pattern and any transfer of shares during the year are in accordance with statutory or regulatory requirements. So before I move on to the next content, let's try to think about the requirement for this report. So the financial statements have been prepared by the management only, and which would be audited by the auditor. Auditor will also give his opinion. Then what is the need for this management report? And what is the objective behind this management report? So why is this management report required to be given? Let's suppose if anything is asked from a person, if any point is asked from a person, he will answer that verbally very fast. Or you can say it will be easier to obtain a verbal confirmation. But let's suppose if you would have discussed something with a person and you will ask that person to give this in writing. Whatever you would have discussed, you would have understood from him. If you ask him to confirm this by giving that in writing, that person will not do that immediately. I'm not saying that this will take some time. No, the person will do that only when he's sure about it. Because he understands that the moment he will put this in writing, he will attach his responsibility to that. He will not only become accountable, he will also be held responsible in respect of whatever he would have confirmed. So same is the rationale for this management report. Now, if the insurance business has been going on, it can definitely be understood by anybody that the registration of this insurance company will be a valid registration. And its validity is also approved. Wherever any renewals were required, it would have obtained. The company would have been paying its dues to the statutory authorities regularly, on time. All sort of regulatory compliances would have been taken care of by the company. Anybody would generally understand this. But in the form of writing, if you obtain this from the management, so what will happen? Because they become responsible, for which they were otherwise also responsible. So I'm not saying just by signing this document they will become responsible. They were responsible otherwise also. It's just that now they are going one step ahead by giving this confirmation in writing that yes, whatever was required to be done by us, we have been doing that. So that's why it's a confirmation, it's a certification from the management in respect of all the regulatory compliances which are covered in this content, whether those have been properly taken care of by the management or not. So that's why this management report is considered to be very important. And this is something which will only help the auditor, because tomorrow when the auditor would have obtained some understanding, he could have performed certain procedures over which he may, let's suppose, not have found something missing. But the management, if that would have been reported by the management in this report, that would only help the audit. Because if there is anything which the auditor would have missed out, he can definitely look at that point over there. Because the management is something which knows everything about the business of the company. And after careful evaluation, management should sign this. Okay, so let's quickly go through the contents of this report which is required to be used. Declaration that the management has not directly or indirectly invested outside India the funds of the holders of policies issued in India. Okay. Management has not invested outside India the funds of the holders of policies which were issued in India. Confirmation that the required solvency margin, you remember the solvency margins which are required to be maintained, those have been maintained. Certification to the fact that values of all the assets have been reviewed on the date of balance sheet, and that in his belief the assets set forth in the balance sheet are shown in the aggregate at an amount not exceeding their realizable or market values. Now this is important. Why is this important? Because this will not only help in the solvency assessment, this will also help to assess about the impairment requirements. Yes or no? Further on to this, certification to the effect that no part of the life insurance fund has been directly or indirectly applied in contravention of the provisions of the acts which are applicable to the fund. Disclosure regarding overall risk exposure and strategy adopted. Now, what is this overall risk exposure? Now, we are not talking about any specific exposure in relation to any process. No. We are talking about overall risk exposure to the business. Means what all risks are there. It could be about liquidity risk. It could be about credit risk. It could be about any sort of risk to which the insurance company is subject. And what is the strategy which the management would have adopted? Yeah, that is required to be disclosed. Operations in other countries, if any. with a separate statement giving management's estimate of country risk and exposure risk and the hedging strategy which is adopted. This is also required to be given. Aging of claims, indicating the trends in average claims settlement time during the preceding 5 years. Yeah, this is something which is required to be disclosed. Certification to the effect as to how valuation of investments has been carried out. Now the valuations of investments, again, if there is a specified requirement in relation to valuation of those investments, whether that has been done as per that specific requirements or not. Okay. Review of asset quality and performance of investment in terms of portfolios, that is separately in terms of real estate, loans, investments, etc. So this is all about those investments in the portfolios which the insurance company would have done. A responsibility statement indicating therein that now this is something which will form part of the management report only. Now they will give a responsibility statement, means they are taking up this responsibility. But first, in the preparation of the financial statements, applicable accounting standards, principles, policies have been followed along with proper explanations to material departures, if there are any. As I told you, you will practically not see any material departure from the accounting policy. Otherwise, that will be considered to be a very serious non-compliance. So that means, in a way, management is taking the responsibility for the preparation of the financial statements and ensuring that the accounting policies are in line with the accounting standards. Second, management has adopted accounting policies in line with accounting standards and those are applied consistently. Management has made judgments, estimates have been made which are reasonable and prudent, so that the financial statements are giving true and fair view. Something which is again required to be done by the management. Yeah. Then management has taken proper and sufficient care for maintenance of adequate accounting records with applicable provisions of Insurance Act, Companies Act. Why? For safeguarding the assets of the company and for preventing and detecting frauds and other irregularities. Now again, this is something which is a responsibility of the management. What? To safeguard the assets of the company, to ensure that there are systems in place so that the frauds are prevented, so that the frauds are detected, so that there are no irregularities in the business of the company. So this is something which is the responsibility of the management. Now all of these responsibility statements management is giving explicitly. Yeah. Next, management has prepared the financial statements on a going concern basis. Now we all understand that financial statements, whenever they are prepared, and if nothing is specified, it's assumed as if they are prepared by considering going concern assumption as appropriate. Now, if the management is silent on this, and the financial statements are getting prepared, so it's the assumption that the going concern assumption is appropriate. Herein, the management is required to categorically take responsibility of the same. Okay. Next, management has ensured that an internal audit system commensurate with the size and nature of business exists and is operating effectively. Now, this internal audit system is not necessarily required to be an in-house system. No, this can also be outsourced to a third party. Yeah, so that means we can have an external internal auditor, or it can be internal audit department of the company. Means this is something which can be internal to the company. Both ways it's acceptable. But the important point is that this is something which is required would be explicitly specified by the management that the management has been having this system, and this system is also operating effectively. Because just by having the system will not help. Because let's suppose if the internal system is there, but that is not operating effectively. So will that really help? No. So that will help only when that is operating effectively. Yes. Yeah. Okay. Next, a schedule of payments which have been made to individuals, firms, companies, organizations in which the directors of the insurance company or the insurer are interested. Yeah. Clear? So all of these points which you'll see, you'll think, so these are the points which any company is anyways required to follow. This is basically the responsibility of the management only. In fact, in the auditor's report, you will see all of these responsibilities. In fact, most of these responsibilities you'll see. Why? Because the auditor will also specify what all management responsibilities are there. Correct? Yeah. So in a way, over here, what is happening? Management is required to categorically specify each and everything in the form of a report, and which is then required to be authenticated by the management. Means they need to sign it. Clear? Clear on this? So these are the requirements that we understand in relation to various parts of the Schedule A, which was specific to the life insurance business. All right? Yeah. So with this, we are done. We will now move on to Schedule B. Schedule B is again the one which will deal with the regulations, or you can say part of the regulations specific to the general insurance companies. Okay, so before I move on to the Schedule B, if you have any questions, any doubts, please let me know, and then we'll start with the specified points related to Schedule B. And now, as I discussed with you, we'll also start linking a lot of points which you will find similar in Schedule A as well as Schedule B. Okay, yeah. So, any questions, any doubts which you may have? Yes. Yeah, so we move. All right, so now we'll move on to Schedule B, or in a way you can say we are now moving on to specified points related to general insurance business. Now, in relation to general insurance business, talking about some of the requirements related to preparation of the financial statements. Certain things are common. So the first point, that is about applicability of accounting standards. As we discussed, that the Indian GAAP is applicable to the insurance companies currently. Currently, as we stand today, Indian GAAP is applicable to the insurance companies. So that means the accounting standards, the Indian GAAP, is what they are required to follow. In case of life insurance companies, we found all the accounting standards were required to be followed by them, except for a couple of points related to AS3 and AS17. That means about cash flow and segment reporting. Over here, AS13, that means accounting for investments, is not something which we apply. Means this shall not be applicable. And now you will be thinking, but sir, how do we say these are not applicable? This is something which is coming from the requirements of data. So if there is something which is specified by the Act, let's suppose Companies Act says all the accounting standards are applicable to any company. Okay. Now insurance company is also a company. So to this, all the accounting standards become applicable. Over and above this, data is specifying that all the accounting standards will become applicable, but AS13 will not be applicable. So what is required to be then followed? The requirements of data. Okay. Shri Ranjini has a query. She has been saying, sir, can we say that management report lists down the responsibilities of the management and compliances by the management? Yes, definitely. It not only lists down the responsibilities and the compliances, but it also requires the management to certify them, authenticate them. See, one point is wherein they're just writing down, these are the responsibilities. So when you have to write the responsibility and then you have to sign that, yes, I have ensured that this has been done. This is a very, very important thing. This is something which is very, very important for the auditor, because auditor can really get some comfort by looking at such type of statements. That doesn't mean that the auditor will cut down his audit procedures, but definitely he will get additional comfort from such type of documentation. Okay. Secondly, if you look at this management report, it lists down all the key responsibilities, all the significant activities, all the significant areas which are covered in relation to the preparation and presentation of the financial statements, which are important in relation to the financial reporting framework of the company or this financial reporting process of the insurance company. So that's why this is something which will really help the auditor with respect to various things. Okay, yeah. So now, before I get on to the specified points in relation to audit of the general insurance companies, I will pick up all of these parts first of all, because all of these parts we have just discussed. So that's why it will be very, very easy for us to establish a correlation and to also look at the differences wherever there are any differences quickly. So let us just quickly flip through various requirements which have been covered. Okay. So now this part 1 talks about the accounting standards. Then moving on to part B, disclosures. Now this is something which you will find similar to the one which we saw in case of Schedule A. Can you see this? First, it talks about contingent liabilities. Of course, the item will be specific to the general insurance business. So you cannot say that this will be similar to the life insurance business. So the claims, okay, so this underwriting commitments, the guarantees, etc., which would be there, this would be specific to the general insurance business. But you can see all of these items are quite similar. Statutory demands, partly paid up investments, wherein any sort of contingent liability exists, all of these are required to be disclosed in the financial statements. Then, as you move further on to this second part only, encompasses to the assets of the company. Commitments made and outstanding in respect of loans, investments on fixed assets. Please remember that this term fixed assets, even though this has been discontinued for the accounting standards, at various places under the insurance, or you can say under some of these types of acts, this term is still being used. Okay. Claims, less reinsurance. If there are any which have been paid to the claimants in and outside India. Aging of the claims means the one which had been outstanding for more than 6 months and the one which is less than 6 months required to be disclosed. Actuarial assumptions for claim liabilities are required to be disclosed. Premium, less reinsurance required to be disclosed. Extent of premium income recognized, which is based on varying risk pattern, category wise, all of these are required to be disclosed. Okay. Then of course, the important aspect over here was about the accounting policies. Okay. I'm not discussing each and every disclosure, you can just flip to that. Of course, that was about the accounting policies. So now in relation to the significant accounting policies, which are required to be disclosed, that will be captured over here. And if there is any material departure from any of these significant accounting policies, that is also required to be disclosed over. Okay. Now, over here, some additional information is also required to be disclosed. Let's understand what is that. Investments which are made, depending on their nature, amount, security, special rights, they need to be segregated. Something which you saw in case of Schedule A also. Segregation into performing or non-performing investments. Similar. Percentage of business sector wise. Similar. Summary of financial statements for the last 5 years as prescribed by the ADA. Similar. Accounting ratios which are prescribed by ADA. Similar. Basis of allocation of interest, dividend, rents. All of these you can say are very similar to what we just discussed in Schedule A, are also required to be captured in Schedule B. Third, this general instruction. So this is again something similar to what we discussed in Schedule A. So I'm not repeating this point again. Fourth is about the contents of the management. We understood about the contents of the management. We understood how important this is for any insurance company, for any auditor of an insurance company. Why? Because auditor will only get the additional comfort from this. So let's quickly flip through some of these contents. Confirmation regarding the continued validity of registration. This is required to be captured. Certification that dues payable to statutory authorities required to be specified. Shareholding pattern, transfer of shares, similar requirement. Confirmation regarding the solvency margins required to be specified. Certification to the effect that all the assets have been reviewed on the date of the balance sheet and their categorization, etc., are required to be given. This is something which you can relate to the realizable value or market value, wherein we discussed when we were discussing Schedule A that in a way we are looking at the impairment requirement. So somewhat similar over here. Certification to the effect that no part of insurance fund has been directly or indirectly applied in contravention of provisions from the Insurance Act. Correct? Disclosure with regard to overall risk exposure and strategy adopted to mitigate the same. This is again required to be disclosed. Operations in other countries, this is required to be specified. Aging of claims, indicating the trends in average claim settlement time during the preceding 5 years, this is required to be specified. Certification as to how values which are shown in the balance sheet in respect of investments, stocks, shares have been arrived at, how the market value thereof has been ascertained for the purpose of comparison with the values so shown. Those are required to be certified. Review of asset quality and performance of investment means whether that has been done by the management or not. Then comes the responsibility statement, similar to what we saw in Schedule A. First is about the preparation of the accounting policies. Following the accounting standards, ensuring accounting policies are in compliance with the accounting standards. Next, consistency of accounting policies year on year, and in such a manner that financial statements will prove clear. Yeah, adequate accounting records have been maintained, and the systems, policies, procedures are in place to ensure that the assets are safeguarded and the frauds are prevented and detected. There are no irregularities. Management has prepared going concern. That assumption point needs to be specified. Management has ensured internal audit system is in place and is operating effectively. Correct? So all of these aspects you can see are getting repeated. And this is actually, I'm comparing, that's why I'm saying it's getting repeated. Yeah. Part 5. Now over here, we have got another aspect. Please remember, it was not there in Schedule A. So now in Schedule B, we have another part which deals with certain specifications in relation to general insurance business. Okay, so let's try to understand this. An insurer shall prepare the revenue account, P&L account, balance sheet in the form BRA, BPL, B balance sheet. So in fact, you can say these are nothing but the specified formats. Like for example, this Form B balance sheet. What is this? This is a format of the balance sheet. Form B PL. What is this? Format of the PL. Form B RA. Format of the revenue. So you need to strictly prepare the financial statements of insurance companies using these formats. You cannot change these formats. It may be noted that an insurer shall prepare revenue account separately for fire, marine, and miscellaneous insurance business. Now, this is something which will not be there in case of life insurance. So, can you understand why it is there? In case of life insurance business, there is only one type of business. What is the business? Life insurance, into which company has been taken. But in case of general insurance, insurances could be of various types. For fire, for marine, for miscellaneous items. Yeah. So that's why when the revenue account will be prepared, that will be prepared separately for each and every type of insurance business, so that the users of the financial statements can get clarity. They will also get complete clarity in terms of the revenues which are there from different types of businesses. Okay. Next is about the preparation of receipt and payment account, which should be in accordance with direct method, which is prescribed in AS3 cash flow statement issued by ICAI. So this receipt and payment account should be in accordance with direct method. Okay, yeah. So this is again a specification which one needs to remember in respect of preparation of financial statements of a general insurance company, and this is something which the auditor also needs to take care. So now, as an auditor, we need to take care. If the management has not done this, we need to ensure this is done by the manager. Correct? Yeah. So these were about some of the statements which were required to be captured by them. Now moving on to some of the specific items related to the insurance business. Okay. Now, before I move on to some of the specific items related to the general insurance business, let us go back to some of those items which we have discussed in relation to life insurance business. Premium. We talked about various audit procedures for premium. Correct? And we spent good time on this. Kalyani is asking me, sir, what is the difference between Schedule A and Schedule B? Kalyani, I think you missed out. Schedule A deals with those regulations which are specific to life insurance business. Schedule B, you can say, are those regulations or part of those regulations which are specific to general insurance business. So that's the difference. So you can say A is for life insurance, B is for general insurance. Okay, clear? Then Shraddha is asking about this difference. Shraddha, this is something which you'll be able to understand on the basis of the documentation that you read. So the moment you read the documentation, you'll get to know as to where all charges have been covered in, where all encompasses have been put in. So depending on the documents, you'll get the specification as the auditor. Clear? Shraddha is asking, sir, part 5 is not there. So, no, I think you missed out on this point. See, for both the types of companies, whether it is about life insurance or general insurance, format of the financial statements is prescribed. The thing which we have discussed specifically in part 5 is that when it comes to a general insurance business, let's understand this point. I think this can be a point of confusion to others also. Maybe others have not asked me. So let's understand that. Whether we are talking about life insurance company or general insurance company, for them, format of balance sheet, format of P&L, all this are prescribed. All are prescribed. Balance sheet, P&L. Similarly, this is prescribed for them. Okay. In relation to life insurance company, what is the business? Only one type of business. Life insurance. Insurance of life. Whereas general insurances can be of various types. Could be in relation to marine insurance, could be in relation to fire insurance, etc. Yeah? So we are saying types of insurances could be various in general insurance. So that's why this part requires that when you will prepare a revenue account, so it's a separate account which is required to be prepared by the companies. So revenue account is required to be prepared by both. The only thing is that this part is specifying that when you will prepare this revenue account, you will prepare this separately for marine, separately for fire, and separately for other, whatever is done. Okay. Having part 5 over here doesn't mean that we don't have the format over here. Formats are there for both. Clear on this? Yeah? Shraddha, you clear on this now? Okay, so now moving back to audit procedures in relation to the specified line items, or you can say specific areas of general insurance business. So we discussed about premium quite a lot. Yeah. About premium, we discussed about various audit procedures. Correct? Yes or no? Can you now tell me over to you? Yeah, so you also need to start sharing your responses. Can you tell me that the way this premium will be audited and the audit procedures, in fact, most of the audit procedures that we discussed in respect of premium in case of life insurance business Will those be different in case of general insurance business? Quickly, if you can let me know. Tell me, do you think those audit procedures? I'll just quickly get back to those audit procedures. One was about the understanding of business. Second was about understanding of process. Third was about identification of risk, that means risk assessment. Then control testing. Then, depending on control reliance, performing substantive testing, wherein we discuss that we'll do a reconciliation of the premium with the actual amount which is recorded. Reconciliation with the external reporting. Various procedures were shared by you. You mentioned that the premium is received from one customer, recorded in the account of another. Premium has been inaccurately calculated. Premium has not been received for some period of time and that is not getting captured. So if you think about all of these audit procedures, which I've just discussed and which we also discussed in case of life insurance business, do you think they should not be same for general insurance business? Quickly, what do you think? Should those be similar? Can we apply similar sort of audit procedures over here or not? Yes or no? Yes or no? The answer will be yes. Why? Because as we discussed, all of these audit procedures will go by the understanding of the line. Definitely in case of general insurance business, the way the computations would have been done by the management could be different. But the audit procedure in relation to that reconciliation, to that computation will remain the same. Yes? Kalyani is also same. So the audit procedures will be same for both. In fact, most of these procedures will remain same. Let's think about some of the audit procedures which will change. Let's think about it. Can you tell me some of the audit procedures which would be different for a general insurance company's premium as compared to life insurance company's premium? The difference would be in respect of those areas wherein there are differences in the regulatory requirements. Correct? So let's suppose there were 3 regulatory requirements, X, Y, and Z, in relation to insurance business premium. So what will the auditor check? Whether X, Y, and Z have been complied with or not. Let's suppose we have 2 regulatory compliances requirement. It's not X, Y, Z. It's let's suppose P and Q. So will the auditor check X, Y? No, he will check P and Q. Yeah. So that means if we talk about ensuring compliance of regulatory requirements, that will remain same. But which regulatory compliance will be ensured by the management, which will then be checked by the auditor, will be dependent on the specific regulatory requirement which is applicable to the company. Correct? Understood? Yeah. So basis this, do we really need to get into too much details around the premium? No, because this is something we have already discussed. Similarly, if we talk about claims, now the way claims are required to be paid and the quantum of claim which you will see as getting paid would definitely be different. The compliances related to claims will also be different. But all of those audit procedures in respect of claims that we discussed, in case of life insurance business, except for the specific audit procedures related to different regulatory compliances in respect of life insurance business, will they remain same over here or not? Of course, yes. They will also remain same over here. they will also be same, except for these differences which will come in. Shraddha is saying, sir, here the actuarial assumption will be different. Earlier it was on life, now it will be on general insurance policies. See now what has happened? Your product has changed. Let's think about a manufacturing company. Say a manufacturing company is manufacturing 3 products. Product A, B and C. That company will remain the same or not? So when you will perform audit procedures on this company, you will apply the similar audit procedures. But in relation to manufacturing of product A and in relation to manufacturing of product B, wherever there are any differences, of course your audit procedures may vary. So same is the thing over here. Here again, what we are discussing is a different product now. But largely the business remains same. Largely the way the business is conducted remains the same. So that's why some of those audit procedures which we have discussed, they should also remain same over here. Correct? Yeah. Clear? The reason I have been asking you to draw these similarities is because of the fact that when you will understand so much similarities exist between these two, you will find that this chapter becomes comparatively easier for you also. Currently, when you look at so much stuff, you think, oh, there's so many pages in this chapter, there's so much content. But please try to appreciate that content is only getting repeated, but largely the base, the heart of that content is same. So that is what you need to look at, and that is how you need to approach this in terms of designing the audit procedures. All right, yeah. So I think there is some more stuff under the financial statements of general insurance companies, which we could not discuss today, and which we will discuss in our next session. So what we can do is we can just close our discussion over here. So if you've got any questions, any doubts, you can let me know. In the next session, we will continue with our discussion on the remaining part, and we'll also pick up the next concept related to this, and we'll also be discussing some of the questions based on whatever we have discussed. So just make sure that you revise whatever we have covered. Okay, that is very, very important, because we'll also be discussing some questions, maybe MCQs or different questions based on whatever we have covered. All right, yeah. So any questions, any doubts, you may just specify. Okay, so I think with this, we can just conclude our discussion for today. Yes, we are done. All right. So thanks to all of you for your time and for your wonderful participation which you have shown today. Thanks so much. And please make sure that you revise whatever we have covered today, so that we can have discussions on certain questions based on whatever we have covered. Yeah, thanks so much. Yes. Thank you.